Hey, James, how are you?
Yep. Hey, I'm just going to give a little conversation before we get started, just to make sure that we're all settled in terms of what we're trying to accomplish here. Uh, Mario, as you know, I met with Michael in Nashville. We've actually known each other a long time, and our mission and the reason why Mario is with us is to reach a couple 100 million people. We're focused on mainstream. Michael, obviously, you're a legend in the business in terms of the, Bitcoin space. Mario is, if not number one, certainly top few on X now. Certainly Elon's favorite person he links to. His audience, I would say, is younger. People who maybe have, if you're an investor under, 30, Mario, and, you certainly have bought a lot more than Bitcoin. The audience that we took over when we took over the street from Jim Cramer is around 30 million. I would say 20 to 25% of that audience has ever bought Bitcoin together. Obviously, there's movement to ETF, but these guys are not sophisticated. They're probably fearful. We syndicate 100% of our content of note. So this will certainly be there to Yahoo Finance. As you know, I used to run Yahoo Global Media. It still has 90 million investors. It's a little bit like fantasy football. Mario and Mike, once you get an install and your whole portfolio is there, you don't move it. So as we used to say in Yahoo, Yahoo's dead, all 900 million of them. We also syndicate in a recent deal with MSN to 200 million financial viewers per month globally. Again, these are people who probably have it on their start page on their computer, but you're talking about a massive audience, by far the biggest potential crypto and Bitcoin audience in the world, multiplied by a lot. Also, we publish Bitcoin Magazine on Roundtable. So Roundtable is a company that operates a lot of properties, but it operates on the street. So every person who's ever gone to a Bitcoin conference, Michael, which I know you've spoken to probably all of them for the last 5 or 6 years, is on our distribution list. Rand Nooner's list, which is huge, and 20 Bitcoin and crypto influencers. So we went out, made a list of the top 20. We signed 100%. I don't think you can reach a larger audience. Now, Mario is doing a great job educating the bridge between geopolitical and crypto to our audience. He interviewed Kennedy and pretty much everybody in the industry. Our goal here is to make you the voice of Bitcoin to the largest investment audience in the world. And I think the bridge from your technology CEO background and running a public company before anybody in this space is going to help give comfort to an audience that I think is going to be continue to be a little bit skittish in your space. Feel free, Michael, to promote or talk about MicroStrategies as something important for them to invest in. Be liberal in that regard. Obviously, what is out of line, but we're here to support you to help support the industry. And David Bailey is my co-founder, as you've known for years, and so I think that's the introduction. I know you heard that in Nashville, but you probably heard a lot of things in the last few weeks, so I thought I'd do that. Any questions? What we're going to do today is a typical podcast of 40 minutes. In the future, it might be a 5-minute. We'll call if you happen to be available. You can be that voice. Right now, I thought to get the largest audience possible that we'd invite Mario on to ask some questions as well. But we're going to hit you with things that I think nervous investors may want to know and introduce to this massive audience. Michael, did you have any questions before we get going?
No, I don't have any questions. Since we didn't point anything in particular, Mario, I suggest a pretty simple theme right down the middle is just answer the question, why is Bitcoin going higher? That's my tweet this morning, going higher. Why? I mean, if you're an investor on Wall Street and you're considering whether you want to invest in something, is it going up, is it going down? So I am of the opinion that Bitcoin is going higher. Happy to talk about why. I think that way we had a great week last week, both with regard to price movement, but also with regard to a lot of fundamental news and fundamental market improvements that are going to drive Bitcoin higher. So I think that would be constructive. If you have other questions that might be concerns that would keep people from investing, we'd talk about that too.
Yeah. I mean, look, we want to challenge you just because these guys, when you're not on, there are people who, kind of slam the industry. They may even have derogatory things to say about MicroStrategies. So I think, we want you to have a chance to be able to defend, the naysayers. Hey, Jackson, I think we get going. I'll start with an intro of the two of them, but tell me when you're rolling.
That's Jose or Jorge.
Yeah, we're recording. All set.
Okay. Welcome, everybody. Welcome, the street investors. Very excited to have Michael Saylor on as his first time here on the street, at least in a while. We've got Mario Nawfal on as well, who I think is the premier independent journalist on X. I think converging geopolitical, having an acute understanding of crypto and certainly Bitcoin. Our goal here in our relationship with Michael Saylor, coming from a background way before crypto, way before Bitcoin, as a top tier high-tech CEO, we hope over the long run that you have a chance to educate our very large audience that syndicates around the globe, much bigger than just the street, but on syndication partners like MSN and Yahoo, to start an education process, also possibly address some of the fears of going into this space. But clearly over the last year, there's been a convergence going from, I think regular investors of maybe 10 to 15 million to just exponential, growth. We would love for you to be that voice to the people who want to know more than just their broker called them and said, put a little bit in an ETF. So we have a number of questions for you today, but I wanted to welcome you, Michael. We're very grateful that you're here and really grateful that you've been leading the industry for many years.
Yeah, thanks for having me.
Michael, do you want to kick it off, James, or I'll let you kick it off with the first
Mario,
question.
Love for you to give it a start. Yeah.
Yeah. So Michael, I want to start with the question that people outside of crypto ask the most. It used to be, is Bitcoin dead? But obviously that's no longer the case now. Now what they ask is, why is Bitcoin going higher? Let's start with that very broad question, especially for people outside this space. How would you explain to them why Bitcoin is again hitting all-time highs?
Yeah, it's the key question right now in everybody's mind. First of all, there's an emergent appreciation that Bitcoin is digital gold or it's digital capital and it's a new asset class. And BlackRock has been driving the education effort there. I mean, Larry Fink going on CNBC and saying, this is a different asset class. It's a hedge against monetary debasement. It's a hedge against global chaos. And so this is, it's the idea of gold from thousands of years, but it's coming back with a big tech twist. It's gold on a big tech network with all the things we love about technology, mobile phones, the internet, computers, AI, smarter, faster, stronger. And everybody wants to get on the next big tech trend. And so, first of all, that's driving it higher. And that's the fundamental idea is, what if I could transform digitally? What if I could digitally transform capital? There's $450 trillion of wealth in the world that we could just call long-term capital. Rich people just want to stay rich. Other people just want to keep their money. And so that capital sits in the buildings behind you, Mario. It sits in land. It sits in the S&P index. It sits in art. It sits in bonds. It sits in sports teams, because those were the best ideas for the past 100 years. And now Bitcoin's a new idea. It's a digital building. So you've got just the spread of that idea. And then last week, a bunch of stuff happened, I think, that were very critical to the asset class. The Fed pivot. We just saw the Fed move from tightening monetary policy to loosening monetary policy, and that's good for all assets, but traditionally that's even better for global digital capital like crypto assets. I think, and that's going to be a trend that'll continue for quite a while now. I think the second is we saw credible rumors that will probably turn out to be true over some amount of time, which is that large banks like BNY Mellon have exemptions from SAB 121 and they can begin to custody Bitcoin. The entire industry has been waiting for too big to fail banks to start to custody the asset. And you can imagine if your bank wouldn't let you hold Apple stock or you couldn't hold a bond, then probably those assets would be less valued. And so bank custody is a big deal. The third was after the market closed on Friday at 4 p.m., we got an SEC notification that that option ladders have been approved on BlackRock's IBIT spot Bitcoin ETF. That's a huge deal because if you can trade options, you can bring leverage to the market, and that's a new class of investors, but you can also start to hedge the market. And so that really elevates the quality of Bitcoin spot ETFs in the marketplace. So another big fundamental improvement. About a month ago, a fourth improvement is Morgan Stanley approved IBIT and FBTC for solicited sale by 15,000 financial advisors. That was the first major wirehouse to do it. It's inevitable. We're going to have more of their competitors do it. Then I think the fifth is we're barreling toward November 5th. And after November 5th, we're going to have much more regulatory clarity and consistency. There's massive pressure on both political parties in order to bring a digital assets framework to marketplace. And any of that clarity is going to send a very clear buy signal to traditional investors. 99.9% of the money in the world is held by people that don't have the majority of their assets in Bitcoin. And so that's going to be a big deal. When you move from 99.9 to 99.8 to 99, to 98 not participating, those are mega moves in the asset. And so those are the primary catalysts that just kind of came across the wire in the past few weeks and even in the last few days.
Yeah. Hey, Michael, that's fantastic. That's great clarity and great news. I have one question about the presidential election, and I think there might be some irony here. I kind of watched the chart as Trump, it seems, would have a higher percentage to win. Bitcoin has gone up when it's gone down. Bitcoin has gone up over the last couple months. Is it possible that stronger regulation may end up being good for Bitcoin, a little bit like stronger regulation is good for Facebook or good for Google? Let me give you two examples I'd love for you to address. Altcoins and kind of out of control meme coins and things like that. Does that suck does that suck demand away from Bitcoin and over to alternative digital tokens? Given that BlackRock and affiliate banks are kind of doubling and triple down on Bitcoin, might a more restrictive Fed actually help Bitcoin become the clear winner?
Well, I think that if we're talking about the Fed, we're talking about an interest rate policy, and I think the interest rate policy is going to be a bit looser. And so all assets will be a winner with a less restrictive Fed, and I think the writing is on the wall there. I think with regard to regulatory clarity, the real key point here is the vast majority of the money in the world is sitting in 60-40 bond portfolios or sitting in real estate. So the traditional money, conventional money, is sitting in a 60-40 portfolio or real estate. The scared money, the traditional scared money, is sitting in gold. And so the only thing that Bitcoin needs to win is just to be acknowledged as a legitimate asset class. When money managers like Fidelity or BlackRock point out that this is an institutional grade asset, a digital gold, a digital property, or a digital capital, that's the most important thing that's happened in Wall Street in 40 years. And last week, BlackRock published a white paper where the headline was Bitcoin, a unique diversifier. And they said not only is it a legitimate asset class, well, by the way, the regulators help with that. When the regulators approve spot ETFs and when they approve options trading, they're signaling to all these traditional old money investors that this is not tulip bulbs. This is not a scam. This is legitimate. So they do their part by showing it's legitimate, but BlackRock does their part by pointing out it's a unique diversifier. Everybody in the world, if you look at high net worth families and portfolio managers, they're looking for the great white whale. The Moby Dick of investment is an uncorrelated asset which will perform. They want something which is not correlated to bonds. They don't want it correlated to risk assets. They call it alternative investments. You know, big banks have conferences for alternative investments because anybody in the world can buy a bunch of stocks. You know, it's pretty obvious. You can buy them in 15 seconds. So they end up doing things like buying portfolios of timber rights, you know, or natural gas pipeline, you know, rights of way, or the classic, you know, great alternative investment for the last 100 years, just real estate. I just buy some scarce desirable land because I feel like when my stock portfolio crashes, I want something else which is not going to crash at the same time. So Bitcoin represents a new asset. If it's a high performing asset, right, and it's the best performing asset in 15 years, it's up like 48% in the past 48 months versus the S&P looks like a 12 or 13% performer. It's a performing asset. It's a new asset. And now you have $11 trillion money manager that writes a white paper and says it's unique and it's not correlated. So if it's not correlated, that means the 60-40 portfolio can be replaced with a 55, 35, 10 portfolio. And so do the quick math on what happens when 10% of hundreds of trillions of dollars flows into an asset that only has 450 Bitcoin a day available from natural sellers. That's $25 million a day of natural selling. It's not that much. And so when people reallocate their investment portfolio, then that's very bullish for the asset class. And all this regulatory clarity, like, right, I mean, regulations mean different things to different assets for sure. But Bitcoin is a very simple principle. It's like just digital capital. So I've said before, it's like it's either going to zero or it's going to 1 million, because if it's tulip bulbs and if it's not legit, if it's a scam, it's just getting regulated out of existence, right? But if it's legitimate, it's basically everybody's holy grail. It's like basically the font of eternal youth for investors. It's the thing everybody wants, a high performing asset not correlated to the rest of their portfolio. You don't even have to have to agree that you understand it. You just have to agree it's legitimate and it's uncorrelated. And at that point, a portfolio manager says, well, just give me some of it.
Hey, Mario.
Michael, you said one thing. If it's a scam, you said if it's a scam, it's either going to zero or 1 million. I think this is one concern that people have. They're like, if it's going to 1 million, obviously it's a great asset to invest in. But the risk of going to zero is one thing holding those people back. But you said only if it's a scam, it will go to zero. It'll be regulated out of existence. What about the possibility that it's enough of a threat that governments will regulate, centralize it, crush it, as they did to gold, or just over-regulate it out of existence and then replace it with CBDCs?
Yeah, well, gold may be regulated, but it's also worth like $15 trillion, and Bitcoin is worth $1.3 trillion. So if we end up with the failure of gold, Bitcoin 10x's from here. So in terms of being regulated, it is regulated, right? The IRS regulated in 2014 by saying it's property. You have to pay tax on it when you sell it. And it's regulated via these ETFs. So if you're an institution and by charter you have to own securities via a regulated custodian or via a regulated bank, you're buying FBTC or you're buying IBIT. Just like the SEC just approved options trading, but only on IBIT. So there are regulations. The regulations solve the issue of custody. They solve the issue of compliance, and that's why these spot Bitcoin ETFs are the most successful ETFs in the history of Wall Street. Right, billions of dollars is stampeding into those instruments. Oftentimes, what's going on is the regulated instruments like IBIT is one, but so is MSTR. They're basically regulated securities trading on high volume stock exchanges in the United States. There's a lot of liquidity, a lot of traditional capital that can trade those instruments. That's why they buy them, sell them, and trade them. And so yeah, no one's saying it's not going to be regulated. In fact, it's the opposite, which is as it's regulated, that's it's the green light for traditional money and institutional money to enter the asset class.
Hey, just a little follow-up.
What about this before James? Before you follow up, James, one last quick comment, Michael, and then I'll give it over to James. What about the other risk of governments starting to see it as big enough of a threat that they work to crushing it?
Well, I mean, that was the question people had in 2013. I mean, in fact, I thought that in 2013. I tweeted about it. If the government was going to crush it, like the IRS, doesn't designate stolen property or counterfeit money as property, right? If you were counterfeiting stuff, the IRS wouldn't give you a designation of property. So we lurched towards something clearly being legitimized in 2014, and then between 2014 and 2020, it was a question mark. But then in 2018 or so, you started seeing options on CME trading on Bitcoin, if you recall, and so that was another endorsement. And then when Fidelity entered with Fidelity Digital Assets, that was a third endorsement. When dozens and dozens of public companies started buying Bitcoin and were approved by the SEC to buy the Bitcoin and list, that was a fourth endorsement. Then when you actually saw the last administration, you saw positive speeches and characterization of Bitcoin as a digital asset. In fact, Gary Gensler, Jerome Powell, Christine Lagarde, and Janet Yellen all acknowledged it to be a legitimate digital asset. They said Satoshi created something innovative and real. And by the way, they classified it as a speculative asset, but not as a currency. The real uncertainty around Bitcoin has been around its use as a digital currency, not as digital capital, right? If you're holding something and you want to do 10,000 transactions without any AML KYC at any size, now you're crossing over banking regulations and currency regulations, right? And that's highly controversial. But what's not controversial is whether institutions and individuals and corporations in the Western world can own property. So it's been acknowledged, like Berkshire Hathaway can own billions of dollars of Apple stock, right? Warren Buffett's not going to wire $1 billion of Apple stock to Africa without acknowledging that transaction publicly. So the use of Apple stock as currency would be controversial, but the use of Apple stock as property or capital, not so controversial. And so when you think of Bitcoin as, I own a building, right? Am I allowed to own a building? Well, the truth is you can own a building in China as well as in the United States or Europe. You know where you can't own a building? Cuba or North Korea. So where it's illegal to own property, then Bitcoin is in a regulatory gray zone for sure. But where it's legal to own property, you're going to be able to own it. And I think we've crossed that chasm between 2020 and 2024. It's quite obvious, right? If BlackRock is handling the asset, if there's 100 public companies handling the asset, if the SEC is approving options trading on the asset, and if the CME trades commodity options approved by the CFTC, it's pretty obvious that the asset has been adopted and is supported by the regulators. So I think we're past that question.
Just to kind of thanks, Michael. Just to kind of double down a little bit on what Mario said, and notwithstanding, this would probably increase the price of Bitcoin. The metaphor, when he talked about a possible CBDC, if you think about the Great Depression in 1929, people started running for gold a little bit like now. Cohn Loeb and JP Morgan, maybe the BlackRock and State Street of the time started accumulating gold, and they allowed gold to go up in price, the regulators did. And then there was a swap, essentially, where gold was banned, but you were able to exchange it for paper money. And a lot of conversations, and I think this is where Mario was going on the CBDC, is that the accumulation of Bitcoin by major banks right now, BlackRock, being the great example, will eventually get to be where the majority of Bitcoin is going to be controlled by a lot of these large institutions or compliant institutions like I would say Coinbase and Kraken and maybe MicroStrategies. And so if the government ever thought that, hey, this is a currency of terrorism or uncontrolled or unregulated from a standpoint of secrecy, and they wanted to ban it in the United States, as we've learned since Rome, the key backing of any currency is the largest military in the world. And so if one day they said, hey, BlackRock, we want you to swap for CBDC, this would probably be after a 20x for BlackRock. But ultimately, the question is, as they take custody, could there be a swap similar to 1933?
Yeah, sometimes people think that, but what they're missing is in 1933, the U.S. dollar was pegged to gold, right? It was $20 per ounce. And so the U.S. dollar is not pegged to commercial real estate in New York City. And the U.S. dollar is not pegged to Apple stock. And the U.S. dollar is not pegged to Bitcoin. And the U.S. dollar is not pegged to the value of your sports team. So if the U.S. dollar was pegged to something, then of course it becomes very political. But and what happened after that act was the U.S. devalued the dollar from $20 to an ounce to $34 to an ounce. So that was all about getting off the gold standard, right? Right. There is no Bitcoin standard. So the time for you to worry is 50 years from now, when all the money in the world is Bitcoin, when Bitcoin is 450 trillion and it's worth, go figure, $50 million a coin, and then the currency of the country you live in is backed by Bitcoin, then you might see that what'll happen? The more likely thing is that currency, the whatever yo-yo dollar, will be pegged to Bitcoin, and then someone will take over the government and said, hey, we're going off the Bitcoin standard. But they're not going to get rid of Bitcoin. But if you do that, if you go to Bitcoin treasuries, you'll see that 95% of the Bitcoin isn't in these ETFs. 20 for every dollar of Bitcoin in the ETF, $19 is not in the ETF. So Bitcoin is already a global asset outside the control of any nation state or any company or any actor. And that's what makes it so special. And if you think of it as property, it's no more risky for a New Yorker to buy $100 million of Bitcoin than it is for a New Yorker to buy $100 million worth of warehouse space in Manhattan, right? No one walks around New York saying, oh my God, the government's going to seize my warehouse space because they want to devalue the dollar. You're like, well, are you kidding? The government isn't backing the dollar on warehouse space in Manhattan. So it's just a piece of property that you're holding for long-term capital preservation. And where you're going to get yourself in trouble is if you don't pay taxes on your warehouse space in New York City, or if you want to transfer $100 million worth of Apple stock to somebody in Africa and you don't want to talk about who you sent it to, right? Right, but those are problems that people that have $900 trillion worth of assets have today already. We're not going to change the politics or the geopolitics of the world here. What we're doing is giving people a better investment than Google. That's the point.
Yeah, I get it.
Michael, let me ask you a question. You'll probably like it less than the previous questions, to be honest. and something that James touched on very briefly. For the audience that's already convinced of Bitcoin and crypto in general, I want to ask about ETH, but before doing that, I want to go to something that James mentioned, and that's meme coins sucking up a lot of that liquidity away from potentially Bitcoin, Ethereum, and assets that many investors see that they feel like they've missed out on. I want to get your take on two things. First, the impact meme coins have had on Bitcoin and crypto in general, from an optics perspective, and from a perspective of sucking out liquidity. And number two, your thoughts on Ethereum. I know you have concerns with how Ethereum keeps changing and the current state of Ethereum as well, but you've also called it, got it here in my notes, you've called Bitcoin the digital property, and you've called ETH digital application. So can you elaborate a bit more on why, or if ETH will ever be or could potentially be on MicroStrategy's balance sheet?
You know, Bitcoin's the crypto asset that has unambiguous regulatory clarity and global consensus everywhere in the world as a commodity, as an asset, and it has the most certainty, not just in the crypto universe, right? In the financial universe. If you're looking out 100 years and you're buying Bitcoin, you want to buy 1/21 millionth of all the money on the network. And you want people to acknowledge that, oh, I just bought this because I want to hold one block out of 21 million blocks at Manhattan in cyberspace. And so think of Bitcoin as Manhattan in cyberspace. There's a lot of other places you can live. There's a lot of other cities than Manhattan. And there's a lot of other businesses. I don't think that the liquidity or the capital that's being invested in meme coins is going to either drive the Bitcoin bull run, or it's threatening. It's kind of like, is Manhattan threatened by what goes on in Vegas? Not really. I mean, there are different things going on, and I think with regard to all the other crypto use cases, right? Whether it's a DeFi network or a digital currency network or a meme coin or an NFT or whatever, all those things, you know, they're different applications. They meet the needs of different investors. They have different regulatory issues. Last week, MicroStrategy raised, $1 billion in a convertible bond issue. You know, we put not quite half of it into Bitcoin. And then the week before, we raised more than $1 billion in equity we sold in the capital markets. And BlackRock has basically raised 20 billion plus and put it into Bitcoin via IBIT. That money is flowing from people with hundreds of trillions of dollars, and they're making the decision to buy some Bitcoin-backed instrument or own a bond or own a building or own a portfolio of Magnificent Seven stocks. And so the thing that's going to drive Bitcoin is going to be traditional money held by institutions, high net worth individuals, and corporations. When Google has billions of dollars a month and they either buy some bonds or they buy their stock back or they buy Bitcoin, right? They're just looking for capital preservation. So Bitcoin's very straightforward. These other things, right? They have their own thing, right? I will acknowledge people like all these other things, right? And they're all interesting. And let's say gambling. People like to gamble. And if you gamble on an Indian reservation or you gamble in Vegas, maybe you make a lot of money and have a lot of fun. But if you do online gambling, it did get banned, and some guys got arrested for it because they crossed, a bright line. And so sometimes, some places you're allowed to do it, other places you're not allowed to do it. It would take a lot more than a few minutes to cover all the nuances of it. I think that you have to think very carefully about what kind of investor are you and what kind of investment are you making.
Yep. Hey, if you
and you've just on the ETH, on the ETH. I'm sorry, James. Just on the ETH question as well. I've asked pretty directly whether you MicroStrategy could ever have ETH on your balance sheet. And again, I want to reference another quote that you've used to describe ETH. You said ETH is more akin to a platform trying to dematerialize the JP Morgan building and the banking establishment. And you've called Bitcoin as the foundational granite block for that building.
Yeah, right now what's clear is that there's regulatory support for public companies and institutions to hold Bitcoin. There isn't regulatory support or consensus for public companies or institutions to hold ETH. And that's above my pay grade. I don't make the rules. That's just what it is. But generally, it's well understood that if you have a public company and it's not listed, say, in the United States, you can't move the listing to the United States and get approval from the regulators to trade unless you're holding Bitcoin only. So the safe choice for a publicly traded company or for a large institutional investor is Bitcoin. I think all the other crypto assets fall into a gray zone, and there's a lot of questions to be answered about who can handle them and what their future is. I don't really know the future.
If you do get regulatory clarity and from a regulatory perspective, you can hold ETH, would you consider it? Is it an asset class you would consider in its current state? Last question before James.
Yeah, that's a really big if, but MicroStrategy wouldn't, because MicroStrategy is 150% Bitcoin. So I leave these other things. Look, they're gold miners and they do gold, and there are some people that do platinum and some people do palladium. We do Bitcoin, right? We're 150% Bitcoin. We're going to be Bitcoin. And the only thing I like more than Bitcoin is more Bitcoin.
That's a great answer, Michael. Hey, when we were in Nashville at the biggest Bitcoin conference in the world, both RFK and Trump, I don't know if it was hype. I'd love to hear your opinion on it. But they talked about the U.S. government accumulating Bitcoin, outside of regulatory seizures. One, do you take that seriously? And two, what would the effect to our national debt, the state of our, budget? Have you thought about that at all since those announcements?
Well, I think what's clear here is the Overton window is shifting. 4 years ago, the question was, is the government going to ban Bitcoin? And 4 years go by, and now the discussion is, how much Bitcoin should the government own and should they buy more, right? That's a major shift, right, for people that are paying attention. I'll note, right, what Senator Lummis said is we should accumulate a strategic Bitcoin reserve. What RFK said is I think we should acquire 4 million Bitcoin. And what Trump said was, we will not sell our Bitcoin. Okay, so if you look at the United States and say, what is it the United States won't sell? They won't sell their national parks. They won't sell their nuclear stockpiles. And they won't sell their Bitcoin. They would sell everything else. If they seized $1 billion of Apple stock or Microsoft or your building or your sports team or your Picassos or your Leonardo da Vinci's or your diamonds or your silver or your gold, they'd sell it. But you do not sell your Bitcoin. Why is that? Because Bitcoin is the most scarce, desirable property in the universe, right? It's global capital. And if you want it, why wouldn't you do it? Because it's the best thing to own forever. But why else wouldn't you do it? Because if people do stop using bonds or sovereign debt as a long-term treasury asset, what's the next best thing they're going to go to? Well, the logical next thing to go to is Bitcoin. And so the competitor to holding bonds as the global capital asset is Bitcoin. So the smartest thing you could do to support the US dollar is simply buy 20% of the thing that everybody might one day switch to before they get there. It's kind of like the US buying Louisiana territory or buying Alaska, or just, if you have Virginia and the Eastern colonies, you might as well get the rest of the nation, because if people go west, wouldn't you want to own the place they're going to go to? That was generally the idea, so Bitcoin represents the next financial frontier. You ought to buy it because it's a smart investment, but you should also just buy it because if people lose faith in all your other instruments, that's where they're going to go. And you might as well be there and put your flag there before they get there, because that way you win no matter what happens.
Hey, before we
How
move
will
forward,
following
I'd love
up
to
on?
pivot.
Oh, go ahead, James.
Yeah.
Go ahead, James.
Well, I was going to pivot to MicroStrategy.
Before you pivot, actually,
Yeah.
before you pivot, then following up to James's question is how much does it matter on who will be president on November 5th to Bitcoin's price in the short term?
I think Bitcoin's going to be a beneficiary of whatever happens November 5th, because after November 5th, there'll be more regulatory clarity about what happens next. And I think the results range from good to great, right? I think that there's a lot of other questions that'll be decided November 5th where there are good and bad outcomes, but because it's a very complicated situation. But I think with Bitcoin, time is on our side. I think that Bitcoin is again, it's a new digital capital asset. And after November 5th, we'll have clarity about it. So I think Bitcoin is going to be a winner no matter what. And if you were asking me for a good investment idea that benefits in the fourth quarter, I think Bitcoin is a beneficiary in the fourth quarter no matter what happens.
That's great. Hey, I'd love to pivot to MicroStrategies. Again, I think there's a lot of investors that we reach that really don't understand it. Myself, I think I made a huge mistake about a year ago. I was sitting in Amsterdam at the Bitcoin conference, and I was considering buying, calls on MicroStrategy, and I was just analyzing your company, and I saw the delta between the treasury value of your Bitcoin versus your market cap. I didn't really understand why to invest. It was a mistake that I didn't. A little bit like a lot of people used to not invest in Tesla. They didn't understand it. I would love for you to educate the audience on why MicroStrategy makes sense rather than just buying Bitcoin, although I know you love people just to buy Bitcoin.
Sure.
But I was certainly confused a year ago, Michael, and I'd love for you to educate others if you wouldn't mind.
Sure. So MicroStrategy is the largest public company holder of Bitcoin. And so we're a large public company trading on NASDAQ. We came public in 1998. And at this point, nearly all of the market cap of MicroStrategy is levered to Bitcoin itself. So Bitcoin Bitcoin is like a 50 vol and has been like a 50 ARR. MicroStrategy has levered that up by 20 to 30%, anywhere between 20 and 40% at times. So we trade with a 80 vol, or a 90 vol. We trade with more volatility than Bitcoin because we've levered the Bitcoin. That actually has caused our options market to grow. I think the other day we were $24 billion of open interest in the options market. Okay, that made if you know anything about options and Black-Scholes, right, that one of the important inputs is volatility. And that the more volatility, the more valuable the options. So Bitcoin options would be valuable, but MicroStrategy options are more volatile than Bitcoin options. So we have attracted whole new sets of investors. We've attracted options traders that want to trade the vol. We have issued debt. We're the primary issuer of Bitcoin-backed bonds. And so if you want to buy bonds, and you have to buy bonds against the Bitcoin, we're the only ones selling them in size. And the result of all of that is we get the Bitcoin maxi investors or maximalists that want more performance than Bitcoin, and we outperform Bitcoin. But we also get people that want to be able to hedge their position. We get people that are short Bitcoin, or people, if you want to short this entire crypto ecosystem, we have more short interest than long interest in the options, and I think $12-13 billion of just put options against us. So we attract the longs, the shorts, the maxis, the traders, the fixed income people. The result of all of that is that MicroStrategy outperformed all 500 of the S&P companies over the last 4 years, including NVIDIA. We're up 1,000%. But James, let me give you another simple way to understand MicroStrategy. Let's say you're a real estate investor, and I take you to New York City, and I show you a building in New York City, and I say, hey, you can have this building for $1 billion. It's $1 billion of real estate on Central Park, and you believe in New York. Okay, would you like to buy it for cash? Okay, if you have $1 billion, yes. And then what if I said, you know, I have this publicly traded company and they're able to borrow the $1 billion for 62 basis points interest, no recourse, and buy the same portfolio. Would you buy a building if you paid 0.5% interest, no recourse, and if I gave you the loan, which of the two is a better investment? You see? Yeah. I mean, is there anything that you like that you wouldn't like better if you could borrow money for? MicroStrategy has, I think, $4 billion plus in debt at 82 basis points, less than 1% interest. So if you like Bitcoin, then buy the Bitcoin. You buy unlevered Bitcoin with cash. But what if you could buy $4 billion of Bitcoin and pay less than 1% interest? Well, I mean, it's not for everybody. There's a lot of volatility. You know, if you're a 4-month trader, a 4-week trader, or a 4-day trader, like, I'm not giving you advice on calls, by the way, James. My investment advice, I'm not even telling you to buy MicroStrategy. My investment advice is buy Bitcoin, hold for more than 4 years with capital that won't be pulled away from you. All of these other, I'm definitely not telling you to short my stock with put options, but there's a lot of people that really seem to like that. I'm not, you know, so our job is we are securitizing a high volatility, high performance asset for institutional investors. And they want the options, they want the converts, they want the equity. There's a lot of reasons why they can't trade on crypto exchanges. They can't hold the underlying commodity, even if they wanted to. And some of them, they like the kind of characteristics we give them. I'll give you one more observation. It's like you have high voltage power coming in the front of your house, and then you want to step it down so you can use it in an electric shaver or a hair dryer or your radio, like, or an electric toy for your kids. At some point, someone's got to transform, you know, and domesticate that energy. A lot of people don't want 50 vol, 50 ARR. What they'd like to have 10 vol or 20 vol, 20 ARR, and that's kind of like domesticated Bitcoin. That's enough for them and the way they want it. So MicroStrategy's benefited by being unique and doing the things that our investors can't do. And we do it in a very disciplined, responsible, prudent fashion. And Mario, you know, one of the reasons why we're all Bitcoin is because the people that want to short Bitcoin want to know that we're not going to hedge or diversify our investment because they want to short it, right? They don't want me to say, oh, I made $1 billion trading gold options or trading any other meme coin or trading whatever, because, and this is a very fundamental principle of public companies, right? It's like that my investors are the ones that are diversifying and trading. Like if you've got a $10 billion portfolio and you want 1% Bitcoin exposure, you want the company that can borrow money cheap to buy Bitcoin to give you that exposure. You don't want a company run by a CEO that's going to change his trading strategy every month, because then that company you invested in is opaque, black box, and that will drive you crazy. I mean, part of our fiduciary obligation is, if you want to short $100 million of my stock, I need to be long for the same period you're short. Maybe you hate it and you're going to keep the short for 4 years. I need to be the opposite side of the trade for the 4 years, because I don't want to let you down. I don't, you know, like, you do what you're going to do. I'm going to do what I'm going to do. There's 50,000 publicly traded companies. An institutional investor can compose any portfolio with any risk, return, exposure, upside, downside, using a combination of equities and options and debt. And that's fine. That's their job. So we stay in our lane. And our lane is we are long, levered Bitcoin. And we think that's enough. We think Bitcoin is going from $1 trillion to 10 trillion to 100 trillion. That means there's plenty of space for MicroStrategy to grow. And if we get diversified, it's like taking the laser eyes off. We lose focus. And not only does that make us more likely to fail, but also it means that we're not a clear, transparent, reliable instrument for all of our investors. They want to know what we're going to do and that we're committed to doing it, because that allows them to take very decisive investment actions for their investors. And that's the respectful way to manage the public markets.
That's fantastic. This has been an amazing discussion. Hey, Mario, thank you so much for jumping on and continue to be part of Roundtable on the Street. Michael, we're very honored to have you here as a guest. That was an unbelievable, clear description of the market of Bitcoin and of MicroStrategies. We'd love to have you on as a regular as news comes in, and wish you luck or continued success. Thank you so much, Michael.
Yeah, thank you for having me.
You got it.
Thank you, Michael.
Nice to see you, Mario. Nice to see you, James. Thank you.
Yeah, they both left.
Okay, so can I log out now?
Yeah, you can log out. Thank you.
Okay. Thank you for your time.